Hi there, everybody. Hope you guys are doing good. I just wanted to pop in and give you a quick overview of the last trade that I took. If you watch the last videos that I've been doing, you know that it's been a busy week with a lot of things here and getting presentation together and getting some idea on the room and presenting things and doing the trading and other things that happen in life. And I haven't been trading as much this past week as I usually do, and I'm not as plugged into the market as I usually am, and that will come around the next week or so when we get that live premium room going. But I wanted to give you a really quick look at my charts. I use all different types of charts and setups like a lot of you do, and usually I keep the 15-minute or the 1-hour charts open, as you can see here. I did manage to get one nice trade in here earlier today, even though we were doing things on the Forex Signals chat room and that type of thing, and I wanted to show it to you. So I'm going to pull up the Euro Aussie here. Give me a quick little thumbs up if you guys can hear me in the chat room. I think I'm good. I hope so. Let's see. I'm going to pull up the video here and see. Yeah, it should be good. Okay. So I usually yeah, thanks, Andrew. Very good. I usually keep my bar charts or candlesticks pretty small because I like to fit as much on my screen as I can. So all right, thanks guys. Hi, how you guys doing? But I'm going to zoom in just so you can see a little bit better. This is the Euro Aussie 1-hour chart. I'm just going to pull it up a little bit here. The Euro Aussie has always been one of my favorite pairs. It seems to be one of the pairs that I just like to trade personally. The dollar Canadian, that's sort of always been my nemesis. I know a lot of people love it, and I love it too. I don't do that good on the dollar CAD, and that's one of the things you're going to figure out. Maybe it'll change for me. I still do try. I just put smaller trades on because with experience you gain some education about your own mentality on different pairs. But here's the Euro Aussie. So what I like to do is this. Let me just clean up this chart here a little bit. Zoom back out for you here. And this is sort of how I do things on just looking at the technicals only, because obviously I watch the news and we're going to talk about that next week a little bit more. But here's the Euro Aussie on the monthly time frame. I don't do this every single time if I'm really plugged in because I already know what's going on. But for the newer traders, I like to look at the longer term time frame. This is the monthly. This is the weekly chart. And you can see on the weekly, there's some indecision over here to the right. And I can zoom in some more here. I think I might need to make this just a little bit bigger for you. There's some spinning tops, some dojis, some indecision here on the weekly. I think we can all agree that the last couple of weeks on the markets have been a little bit crazier than average because of the U.S. election, and we had, of course, the Brexit stuff going on with the pound, and there's been a lot of unique things, but that gives you the volatility, and volatility is really the only way you can make money, right? If it's not volatile and not moving, you don't make any money, so you need to have stuff going on. But you can see here on the daily chart on the Euro Aussie, a lot of indecision, a lot of ups and downs, but we definitely have a now I'm not going to draw this exactly here, but you get the idea. We definitely have an area here on the daily chart that price is sort of respected as support up in this area. We broke through, became resistance, went down, came up. We had all the crazy whips with the news, and now we're sort of down in this area again. So here's the template that I like to use, and you don't have to use this. This is just what I use sometime when I'm looking to do counter trend trades, divergence trades. So this is the 200 simple moving average, and then I have the 50 and the 20. Now, moving averages by nature are lagging indicators, so I don't get all bent out of shape. You know, I'm not a moving average guru or anything like that, but I like to have them on the chart. Sometimes I take one of them off just to give me an idea when I'm zoomed in more on the big picture of where I am on my chart. You know, if you zoom in, say you go down to the 5-minute time frame, it sort of just gives you an idea if you're up or if you're down, you know. And if you're zoomed in on candlesticks like this, it sort of just reminds you where the longer term trend is at. That's really why I use them. I don't really buy and sell the crossovers and that type of thing anymore. I have tried that, didn't work that great for me in the past. So again, this is the 1-hour Euro Aussie. I have the MACD over here, the 12.26.9 and the stochastics 5.33. I think these are default settings, by the way. I haven't messed with the settings for so long now. I just sort of leave them how they are. Yeah, it sounds like you can still hear me okay. So let me show you the trade that I took today. So as I've told you a few times already, this has been a busier than average week for me. I had a lot of things going on at home, a lot of things going on at work. Ended up picking up a new vehicle after 9 years of having my same one, and had to sell one and stuff. You know, things go on. You get the idea. But when I'm not able to sit and do long-term stuff, I try to get some short-term stuff going. So I like what Andrew does with the trend continuation. That's a lot of how I trade as well. And his technique, I think, is definitely different than mine, but that's the beauty of it, because I think all of our techniques are a little bit different. But this is what I like to do on the short term. So I look at the daily, and I see here the green, the longer-term moving average, the simple moving average, the 200, is above price action. So that means on the daily, we're in a downtrend. On the weekly, we did cross over underneath the 200. On the monthly, you know, we're definitely in a downtrend there. So 4 hour, we're still in a downtrend. We're under the 200. The hourly, we're sort of sitting there. And on the 30-minute, 15-minute, we just popped above, but you can see how we bounced off that area. So these moving averages are really key. The 200 is a really popular one. And what you should know or learn about Forex trading is that the more common things that all the traders use and the institutions use, you should be using as well, because we all sort of make it a self-fulfilling prophecy, right? So if the big institutional traders and the big money investors, the money managers, if they're all using a 200, if they're all using Fibonacci's, if they're all using support resistance, that kind of thing, that's what I would use, because that's where the big money is using it. So, you know, there's more to it than that, but that's always a good idea. Using your own thing's fine. If you can get a system that works for you, that's great. But here's what I did on this trade. And again, I'm a little bit zoomed. This is usually how I look at my charts, by the way. So I like to squish as many candlesticks on my chart as I can. That's just the style I have. If I go any smaller, they turn into little dark lines. So I'm a candlestick guy. Some of you are line traders. I don't think that many, but a lot of you use the chart this way as well with the bar chart. But with candlesticks, that's just the way I've learned how to do it. So what I did on this trade today is I'm looking for divergence. Now, some of you might trade it all the time. I trade it occasionally, especially shorter term stuff. The longer term time frame that you're on, the more all these signals and shapes and head and shoulder patterns and support line, the longer term time frame you're on, the more that they mean. A support level on a daily chart is way more important than a support level on a 1 minute chart, just to give you an example. Divergence trading on a shorter term time frame is not as reliable as longer term. And I'm going to teach you how I do my divergence trading next week when we get more into technical analysis. But just to show you what I did today, I looked at the Euro Aussie. I found out that we were in a downtrend, right? And there was definitely levels of resistance above the current price. So I wanted to only sell the pair. And of course, I looked at the Euro and the Aussie, get an idea of, you know, how they look relative to other pairs. We'll talk about correlation later, but when I trade Euro Aussie, I like to take a quick look at Pound Aussie, just sort of get an idea if I'm trading one that's sort of a fluke, or if I'm trading sort of with the overall trend in most of the similar pairs. So again, we'll talk more about that soon, but here's what I did. We'll get down to it. So what I saw here was a little bit of divergence. You can see it on the 15-minute chart. Let me zoom in here a little bit so you can see better. So you can see here, we have a high on the 15-minute chart, and then we have a higher high, excuse me, over here to the right. And if we look at the MACD, we see the MACD is higher here and lower over here. So again, I'm used to drawing these more zoomed out, but this is sort of what we're looking at. Let me make that a little bit bigger for you guys. I'm going to just make this a little bit larger, sorry, so you can see where I'm at. There we go. Okay, so that's one line. Again, you want to get these close to perfect, but just for the example here, they're not going to be exact. So here we have the price going higher highs, the MACD going lower lows, or lower highs, and then we have stochastics at the bottom. So again, all of these things are lagging, but I use them as filters. When I think I have a good trade, it gives me extra confirmation. So it's about putting that little 0.5%, 1%, 2% edge into your favor that we talked about in the presentations earlier this week. So here's the Euro Aussie. You can see we have higher highs here. We have lower highs in the MACD. And then what that tells me is I'm looking to sell this pair because there's divergence. in the price structure. So I'm looking to sell this pair. So the question is, when do you get in? So I zoomed into the 5-minute chart. Now I'm going to clear all this stuff off of here, by the way, because I did it on the 5-minute myself. So what I did, I drew my lines right here on the 5-minute. There's my higher highs. And on the MACD, we have that sort of dipping down. And then what I did is I put a trend line just to make extra confirmation. I put a trend line sort of in here like this. Again, it's not perfect, but you can see one up, one down, one up, one down, middle, one up, one down, up here. Then it broke. And again, this is very short time frame trading right now, but you see this longer candle here, which is about 10 or 15 pips. And then we pop back down again. So when this breaks for me and I have my divergence on the MACD versus price action, then I pull down here and I look at the stochastics. And I usually have these stochastics at 20 and 80. These are at 70 and 30, which is fine. It doesn't make any difference really. It just makes it a little bit more detail oriented as a filter. But yeah, that's funny in the chat. Tom Hanks. You know, Tom Hanks isn't a good looking guy, but I totally agree. I've heard that before. There's some pictures of him on the magazines where I would agree with you to that. I don't think that's a good thing though, but whatever, we'll take it. So here we look at stochastics. When stochastics are in the overbought area, above the 70 or above the 80, then I'm looking to sell. And again, we're only looking at this time frame. If you go to the 15, the 1 hour, the 4 hour, everything's going to be different. So as you trade, you got to get a mindset of, where am I going? I'm only going to be selling, for example, on this pair. When's the best time to sell? And how can I get the best risk to reward? So check it out. So we got the price going up in this little channel. We got the MACD moving down, making lower highs. We got stochastics right over here in this area that are still in the overbought. And then we have a break of this. So hindsight's always 20/20. And that's the really tough part about learning from videos and things, is they can make anything look perfect anytime they want to. But in the real time, it's really different. And this is the trade I took just earlier today. So what I did is I sold the pair right around in this area. I didn't get a great entry. It was somewhere in this area. And then what I do is I use my Fibonacci extension. So again, you might not know this yet, but you will. So I go from the swing low on this pair up to the swing high. And I'm going to zoom out just a little bit so you can get a better idea of where I'm at here. All right, let me zoom out just a little bit more. Yeah, maybe that's too far to see. But you get an idea. So I sold this pair on the 5-minute chart. Sorry for the shifting here. I'm trying to get it to look nice for you. Because I know on YouTube sometimes things are sort of small and the pixelation's a little bit rough. But I sold in this area. My stops were above the swing high. So I had a stop of around 30, 35 pips. And I think I gave it a couple pips for the spread. I think I was at 35 or 36 pips up here. And what I want to do is, once I see this, higher highs on the pair, lower highs in the MACD, stochastic in the overbought area, I put on a sell entry on this pair, and I put it on right about in this area like I mentioned to you. Went against me about 12 pips, not a big deal because I got a 30-some pip stop. And then my target is to get it down in the 61.8 fib level or down to the 100. Now, if I zoom out on this real far, you'll see that, actually, let me do this just a different way. Let me do this the other way for you guys so you can get a better idea of where I'm coming from here. Let me make it, let's go this way instead. Now, if I bring this down here, yeah, it's still not going to look right. So I'm just trying to get it to look beautiful for you. Let me draw it the way I had it before. And you know, it's not important to get it looking good, I suppose, but I just want to make it easy so you can see it. The chat room's funny. I love it. You can have fun trading, you know. You can make money and have a good time as well. I do it all the time. I know that. So I got short in this area, and I have my stops up here. It went against me about 15, 13, 14, 15 pips plus the spread. And my target initially when I'm going for a longer term is this 100 level, basically the bottom of where you drew the fibs. And we're trying to get an extension going. So the Fibonacci extension, the target 1 is the 100. I know it's hard to see here, but target 2 is the 161.8. Target 3 is a 261.8. But again, I don't have the time right now, right? This is real world. I'm not going to sit here and watch this trade all day. I don't want to be checking it. So my initial target was to get down to the 100 level. And you can see what happened. If you look where I got short, we'll just give it a few extra pips here for the spread. This was roughly 76 pips. And this is a 5-minute time frame. I mean, it didn't take very long for the pair to get down here. So when I got to this area, I took half of my trade off, or was it 0.6? 60% of my trade off at this area. And then I moved my stop down to the area I got in before. So now I locked in profit, and my stop is still up in this area beneath where I entered. So there's no way I can have any loss at all. And then what I did not too long ago, I think it was about 20, 30 minutes ago, I took the trade off altogether because I saw this moving up, coming up, and I didn't want to sit here and watch it anymore. So I just closed what was left. I think I had 40% on my order and got around 30 pips or so. So you know, this is in hindsight, but that's what I did today. I couldn't show you in real time because I was doing the presentation earlier. But this is a simple divergence trade. And it's just one of the strategies that you can use to trade the Forex market. So I'm going to set this back up the way I had it. And let's go back out to the 1 hour. And it still might go, by the way. It still might be going. I'm out of the trade, to be honest with you right now. But I took my profit, and I made a nice chunk of money today already, with very little effort, just doing repeatable things that I know have worked over time. Andrew was looking at the dollar yen, and you can see across the board here. I know these are all very small for you, but I'm on the 1 hour time frame. Euro dollars here, pound dollars here in the middle, and Aussie dollars over here on the right. Then I have euro yen here, pound yen, and dollar yen. And I'm going to show you more of this next week. I know it's all hard and small to see, but the dollar is basically the news right now. If I look over at the Dow Jones, the stock indices, right now the Dow is down 13 points. NASDAQ's up a little bit. Gold is up a tiny bit. Silver is up a few pennies. And it's just basically all about the dollar right now. The Aussie's falling, the the euro dollar's falling, the pound dollar's falling, the Aussie dollar's falling. And it's all about dollar strength. Gold is going down. Silver's going down. Crude oil's going down a little bit, sort of holding its own. But take a look at the dollar yen. That's been the trade most people have been talking about here. Andrew's strategy, which I don't know yet. I haven't learned his strategy. I'm going to learn along with you. His strategy basically involved buying the dollar yen on this pullback. So I'm not sure where he's in or if he's out or whatever, but definitely a nice move up here and not too much timing when we're shooting at basically 90 pips or so up from these lower levels. So a nice solid trade. And that's where that trend continuation strategy is very, very powerful. And within that area, if we zoom in on a 5-minute chart on the dollar yen, within all this sort of consolidation here, there's divergence trades, trading that you can take up. There's inside, outside divergence, or different things you can take up and sort of scalp along the way if you're into short-term stuff. Some of you only trade off the daily and 4 hour, and that's fine. I mean, some of the most wealthy Forex traders I know only trade long-term, but you can apply these strategies to any time frame. So again, I'm still looking at this dollar yen into the long category. I would not be a seller right now. If you're going to buy, you might want to wait for a little pullback. So we're sort of at a breakout point. The Euro Aussie, I'm still biased to the downside on it because of that trade that I had, but I'm not in any trades at the moment. So that's all I have for you guys. I just want to share a little bit, pop in. This is the first time I've really actually just popped in randomly. So I hope it helped you out a little bit, give you some ideas. And we're going to continue to do this when we get into the premium room starting a week and a half from now, where we're going to be looking at certain pairs, maybe talking about some news. And what else I think is going to be really fun is Andrew and I are going to come on together. And we're just going to brainstorm. We're going to go over questions from the chat room. We're going to go over all sorts of things together so you can see us both live and in real time. So it's going to be sort of fun. And we welcome any feedback. I mean, I definitely do. I know he does. If you have critiques or something you want to see more of, just let me know, let him know, and we'll get it done. So there's some pretty good moves going on right now in the market. I mean, with the dollar. So keep an eye on that stuff. And I will see you tomorrow morning, U.S. time. Andrew might be on later, and then he's on before me tomorrow. You can see the schedule. Thanks a lot. Have a great day, and happy trading.